welcome back. Well, it was all about oil prices overnight, and they actually slipped as a new deal to freeze global oil production disappointed the market.
It's a domino story here today. Down arrows all the energy majors. Overnight, though, the top oil exporters, the Russians, the Saudis, coming to an interim agreement, they said, whereby they would not increase crude oil output above the January level. But there was a sting in the tail to that.
That was under the caveat if Iran and Iraq also agree to halt production increases. But Iran was absent from the meeting and has flagged plans to actually do the opposite and ramp up shipments.
And who in some ways would blame them for that position? Pete McGuire from xm.com/au with us in studio this morning. Welcome to the show. The Iranian connection to all of this. They've come out of pariah status. They've been brought back and welcomed back to the international community. But by way of welcome, they're told, don't do what you were in the business of doing. Please.
Well, good morning, Carson. Good morning, Ingrid. A couple of quick things. Exactly right. You've got geopolitical tensions as far as Sunni versus Shiite, Saudi Arabia and Iran. That's the first part of it, of course. Second is that they're saying that they'll cap production at these sort of numbers and freeze at record numbers that they achieved in 15 and early 16, which is great in the sense of for Russia, certainly for the Saudis. But there has to be some form of piecemeal put together as far as Iran, as you highlighted, exactly, because they're coming back into the play and they want 4 million barrels of production.
Well, the market obviously isn't believing that will happen.
No, I think that's exactly right. It'll be the first time that non-OPEC and OPEC members have really come to some sort of an agreement since about 15 or 16 years ago, Ingrid, and I think that at the present time, it's just got to wash through the market to see whether both sides are receptive.
Is this step one, though? I mean, is this a positive step towards potentially getting a curbing of supply or a freezing of supply?
Well, you're trying to glue something together, so it's got to be a positive if you're a producer. The other side, of course, is when you look and you critically examine OPEC and non-OPEC producers, compliance is a very major internal workings that's terribly hard for these countries to come to an agreement and say, yes, we're only going to produce 2 million, and all of a sudden they're at 2.15 or 2.3. So that's been very evident over decades, and so I think from a compliance angle, it'd be very hard to police.
How do you navigate this volatility? Because, I mean, this is sort of subject to like a 6% swing up, even just as they were walking, literally as they were walking into the palace, and the gold doors were being, slammed shut behind them. The price was rallying 6%, and as they emerged, it unwound. Yeah,
exactly. I mean, when you look at it on a minute-by-minute tick, it's been dramatic. Really very, from a trader's perspective, you can really be taken out quite quickly with those big whipsaw motions. Who would have thought that you would have seen a correction by Brent and then 4, 5, 6%, and then you're seeing the same evidence as far as WTI. So it just shows you the volatility and, of course, flexibility of the market.
Should we talk collateral damage? The Deloitte call out as well, the sobering one here. This is a global forecast.
Well, yeah, Deloitte's came out with a study as far as over 500 global oil and natural gas producers, and when you look at those sort of numbers, and then they're saying that there's greater than 34% chance of bankruptcies this year, that equals about 175 odd companies. They're publicly traded across the globe, so that's not that demonstrates, I think, that previous thoughts as far as the OPEC producers and non-OPEC. That's the balance sheet issue, and when you roll it across to Saudi Arabia, their budget deficit last year was $98 billion. So that's why everyone wants a higher oil price, and that's been very evident across all players.
It's not just Deloitte fishing for work. In terms of corporate restructuring,
who knows?
Restructuring talking here, isn't it?
Well, probably they're pushing their own barrow. I don't know, but I just know that one thing for certain: you've got a lot of hurt out there.
When we talk about the oil price and what we've seen with the volatility there, and of course China concerns, you've had a lot of people getting into gold, but Goldman's is actually out saying short gold now. They say it's over, and
they changed their name. Away from gold.
Exactly. Silver.
There's nothing to fear but fear itself, I believe, was the exact quote out of it.
That's original.
Well, I think so, yeah, exactly right, Ingrid. A couple of things. First off, last week, 1260. It's off 5%. We're at 1200 now, 1201. Second part of the equation, of course, is that China is back into the play after their lunar New Year week. The third part, of course, is that Goldman's are suggesting rolling indexes like their GSCI. They could be an instrument that you would want to short a market like this. And fourthly is that the Chinese bought large holdings of gold, and that's why they're looking at selling at these sort of levels at 1,050 and 1,100. So they're showing quite a nice profit. So it's been it's not a bad time to sell into a market, as market is a little bit higher than you thought.
When's Diwali?
It's later in the year.
Yeah, I'm just going to say, because when do we get that baton change?
Between China and India, of course, but that's traditionally a little bit later in the year. So it's a little bit quieter. We're going into Easter, and of course, those the festive seasons then start again.
Let's talk about agriculture, the wheat trade, the global wheat trade for one.
And the almanac as well. Does that tell us anything?
Bring out the book, Peter.
No.
It's kind of telling, isn't it? Because that is kind of the Bible proverbially, isn't it? Of commods.
Well, that's right.
When you take your reflection
I've been a subscriber for many, many years. It's a wonderful book, and it comes out yearly, and it's great reading for anyone.
With the volatility we're seeing right now, th'd have to rewrite that book every day.
Yeah, a little bit like that, of course. When you're thinking wheat harvest, you had a record last year globally. 2015 was really, hit the ball out of the park. And now you're looking at wheat currencies that are propping up the market from the producer's standpoint. 16 is going to be a good year. I don't know whether it's going to be a record, but certainly it's going to be a very good year for producers globally. So that's the storyline, and I think that those numbers will probably play into the market.
Here we have a story on markets today. Domino's getting into France, for instance, in a big way. You look at primary produce, primary commods, softs that they're going to have a call on. Do you get a sense that this is a favourable environment for the next 6 months that they are now pushing into? How are the headwinds or the tailwinds?
Well, first off, it's dietary. Secondly, of course, that you're seeing that there's plenty of supply out there. Thirdly, you've seen currencies have large fluctuations over the last 6 to 12 months against the US dollar. So that plays, as I mentioned, plays favourably for those countries that are producers. And then the next part, of course, is I think strategy and global demand. You've just got to look at opportunity, and that's where someone like Domino's are obviously seeing a position there, and Paris and France could be the next. Out goes the croissant and in comes the pizza.
Oh, heaven forbid.
All right.
Okay.
Peter, we're going to have to leave it there, but there's a lot to get through, of course. Peter McGuire there from xm.com/au live in our business centre.